Hi, Level Up community. This is Kisha, and this is how I will communicate to the client about ISOs and AMTs. So let me share my screen. Hello, client. Thank you for your time. And we can assure you that after this meeting, you will have a better understanding about ISOs and AMTs. So we can also assure you that we will provide the best tax strategy so you can get the most out of your ISOs. So let's start. What is ISO and terms related to it? So ISO, or the incentive stock options, are employee incentives that gives an employee the right to buy shares of a company stock at a very discounted price. So these are given with some terms and conditions from the point of retaining the employees for the company's benefit. So what is alternative minimum tax? It is a parallel tax system designed to ensure that high-income individuals pay a minimum amount of tax regardless of deductions or credits that they claim. So keep in mind that when you exercise ISOs, you are triggering AMT, or the alternative minimum tax. So apart from the regular tax computation that we do when you exercise ISOs, we also compute AMT in the background. And in connection to that, with AMT comes with AMT credit, or the alternative minimum tax credit. So what is it? So AMT is basically the payback for the AMT you paid when exercising ISOs. This is only allowed if you exercise ISOs, and you get AMT credit because of ISOs. So that's just how important the relationship of the ISO and the AMT. So let's now discuss about regular tax, the one that I have mentioned before. So regular tax versus the alternative minimum tax. So let's see it on this illustration. So this is how we compute the regular tax form. The taxable income plus the deductions and credits equals taxable income, and it uses the tax bracket on a marginal scale. While alternative minimum tax computation includes alternative minimum taxable income plus the ISO exercise. This is when I told you that when you exercise ISOs, it triggers AMT. Plus, in the AMT, it actually lessens the allowable deductions that you can claim. So it totals to AMT, taxable income, and the tax rate that we'll be using on this is a flat one that is 26 to 28%. Very different from the regular tax competition that we use the tax brackets. So going back, regular tax offers more deductions and credits and uses marginal scale or tax bracket, while AMT, triggered by the ISO income minus the limited deductions or lesser deductions, and uses the flat tax rate. So if you compare the regular tax versus AMT tax, whichever of the two computation gives the higher tax, that is the tax that you will be paying. So it's important to note that taxes should be beneficial to the government. That is why we are picking the higher of the two computation. So next, Form 8801 is the tax form filed with the tax return. You do not need to file a separate tax return with this. It is the form that is used to figure the minimum tax credit, if there are any, or for alternative minimum tax you have incurred in the prior tax years, and to figure any credit carry forward. So if you have noticed, I have mentioned prior tax years and credit carry forward, or the future. So let's discuss that here. These are just some of the main rules upon claiming the AMT credits. So if you have exercised ISOs before in the previous years, you may have been hit with a hefty alternative minimum tax bill. So for you to claim it, one, you can only claim on the year following exercise of ISO. So if you decide to exercise your ISOs this year, 2024, you may be able to claim your AMT credit next year. Second, you can start getting your credit back once you stop exercising your ISO. So if you ever are thinking of exercising another batch of ISOs next year, we may advise you to not do it yet or put it on hold if you want to claim any AMT credit that you may be allowed to claim for next year if your exercise of ISOs this year triggers AMT. So third, to qualify to claim the AMT credit on the year following the exercise of your ISOs, your regular tax should be greater than your AMT. So if you exercise your ISOs this year, and that means you can claim your AMT credit next year, we should put in mind that your regular tax next year should be greater than the AMT. That is why you should not exercise ISO. But that doesn't mean that you are not allowed to exercise ISOs. You can still exercise ISOs next year, but you may not be able to claim AMT credits. But worry not, because those AMT credits that you were not able to claim will be carried over to the future. But take note that that's only if you stop exercising for that year, that you can only claim AMT credits. So forth, as long as you, the client, is not subject to AMT in the current tax year, then you can qualify for credit. So put in mind that at the year of supposedly claiming the AMT credit, your regular tax should be greater than your AMT, which means as long as you are not subject to AMT on the current year, you can qualify for the credit. So our goal is to ensure you that you navigate these taxes complexities smoothly like a butter. So if you're paying AMT now, we need to help you plan for claiming your AMT credits later on the next years. So this involves careful timing when you exercise ISOs and understanding the tax implications. So if you have questions about claiming AMT credit or need assistance with your tax filing, that's where we step in as your trusted tax consultant. So I hope you understand everything you need to know. So just send us a message if you have more questions. Thanks so much for your time, and bye-bye.